to the ABC Podcast.
Always be cool.
The show where your hosts, DC and BK, showcase your local business and real estate pros going gangbusters in leadership, community involvement, and just being cool.
Here are your hosts, serial entrepreneurs, mortgage experts at Summit Lending, and partners in crime, Darren Copeland and Bobby Kerr.
All right, everybody, it's the Always Be Cool podcast, hanging out with your hosts, Bobby Kerr, Darren Copeland.
What's up, everybody?
Hope you're having a great day. We are very, very excited today. We have founder, president, and CEO of Homepoint Financial, one of the country's leading wholesale lenders. Take it away, DC.
All right, everyone, here we go. So today we have Willie Newman, the founder, president, and CEO of Homepoint. He's one of the top experts and innovators in the mortgage industry. Homepoint is the nation's third largest wholesale lender. It's one of the very few companies, Bobby, that is solely focused on the wholesale channel. He's been a leader in the mortgage business for over 30 years, guiding multiple companies and setting the foundation for brokers as we know it today. Has earned the nickname the Godfather of Wholesale. All-around awesome guy, amazing leader, and friend of Summit Lending, Willie Newman. Welcome to the show, man. How are you?
All right.
Thanks, Darren. Thanks, Bobby. I feel like I'm cool by association now. So,
Well, you are on the Always Be Cool podcast.
Yes,
Exactly.
Well, let's start right where you said, DC.
Yeah.
The Godfather of the wholesale broker channel of mortgages. That's a lot of connotation there. So maybe you just dive right in, Willie, and tell us what's going on with that nickname, how you earned it, and how it kind of drives your passion every day to help broker and broker shops.
Yeah, sure. So I think one, it means I'm pretty old, but I started in the business in the late 80s, and I met a gentleman who became my mentor. And this was at the time where most mortgage loans were done by savings and loans, and specifically loan officers within savings and loans. And of course, mid-'80s savings and loan crisis really created this dislocation of both loan officers and of the funding sources for loans. And we live in a time where we just think of the agencies as really Freddie, Fannie, Ginnie, always there, fund 90+% of the volume, especially with independents. But back then it was these S&Ls. And so this dislocation created an opportunity that my mentor saw to form. We were a very small savings and loan, but we were in good shape to form something that really connected using Freddie Mac and Fannie Mae as your funding source, which again back then was not the norm, creating an opportunity for loan officers to actually leverage this construct that was in place called a mortgage brokerage, but really wasn't used for mainstream mortgage lending. And we had seen that brokers had started to use that construct, but we really started to encourage them to do so. And that kind of fostered this brokerage channel in a way where we were able to leverage it. Again, very tiny savings and loan. We had a number of loan officers, but we knew we couldn't grow the business without having a leverage point. And that dislocation created the opportunity to do so. So that's the first real lesson I learned strategically in this business, is that when you have such a very cyclical, volatile business like mortgage, dislocation is what creates the greatest opportunity. And of course, we're in a huge dislocation right now in the business. And then also, really the brokers were really the way in which the business over time was going to grow. And so I guess that all that means that I was kind of there at their creation, and that really was a creation of kind of what I would call the modern mortgage broker. It's obviously evolved since the 80s, but so I guess that's why I earned the moniker Godfather.
It's interesting that you talk about the dislocation, Willie, because I know we chatted about that in the past, but maybe talk a little bit about the trend over the past couple of years of retail loan officers looking at the broker channel. And you're right, we're in a big dislocation right now, but it just all depends on the way you look at it. The way we look at it, we see it as a huge, massive opportunity to introduce other retail loan officers to the broker channel because, as you know, in the past when people had rates in the 2s and 3s and pipelines are super full, loan officers were comfortable and they weren't looking to make a big move, right? They didn't want to move a big pipeline and do something different. So touch base a little bit on that as far as the opportunities now for that broker model to really take some more market share?
Yeah, so again, I'll go back a little bit, because if you look at where broker share was pre-crisis, people use different metrics, but I would say that a pretty consistent kind of, I don't know, median of it all was about 50% share. And so, at that time, brokers were the predominant kind of origination channel in the business. And so you saw that was kind of the peak, with the crisis and with, the lack of confidence in kind of the broker channel, the kind of the flight of originators from the broker channel to what I would call safe, at least at the time, safe havens and banks and in other independent originators or independent mortgage banks rather. You saw that share going on single digits. We started Homepoint in 2015. What we saw was that share was starting to grow, not materially, but at least the trend was good. And by 2018, what we had determined is that the broker channel really was the most efficient channel to do business in for us as a wholesale lender. And so that, as you said, that's kind of when we started saying we were in every channel of origination. Let's get to the point where wholesale was our sole area of focus, and that's what we did. But what we didn't have is we saw the trend and we felt like it was the most efficient. But what we didn't have is we didn't have definitive proof that it was the most efficient channel for consumers. And so part of our thesis was that what eventually wins in any business that faces a consumer is when it's best for the consumer.
Right.
And so fortunately, in 2018, the HMDA data was expanded such that you could start to actually compare different channels of origination, apples to apples, on what it meant to the consumer. In other words, who gives the best deal to the consumer. And so in 2021, we took all that data, spent about 6 months digging into it from a data science standpoint, and we're able to produce something that showed definitively that since 2018, since the creation of this expanded data set, brokers have been the best for consumers. In 2021, that was approximately $9,400 per loan.
Yep.
And I think importantly, for a number of reasons, with minorities, it was even greater. It was over $10,000 per loan. And that includes both upfront charges and life of loan, kind of the differential in interest rate over the life of the loan. So, we saw it in 2018, but we wanted to prove it. We proved that, from looking at the data, that's best for consumers. And when you get into a situation, Darren, as you said, in a dislocation, it's kind of when times are good, there's not really this impetus to migrate to what is most efficient. It's kind of what's most comfortable. And frankly, some of the elements that are valued more highly, like capacity and control of the throughput, maybe that kind of trumps efficiency. When you're in an environment like this where every dollar counts, every basis point counts, it's like naturally, whether you're an originator or whether you're a consumer, you should migrate to where it's most efficient and where the best deal is for you, as either it's a loan officer or a consumer. So, now this data that shows it definitively is really kind of the driver behind what we've seen, which is a significant increase in migration from various retail channels into the wholesale channel, or specifically into brokerages.
Well, exactly, because what I have found is we're having so many conversations with retail loan officers right now, Willie, that I have been talking to for several years, right? And now all of a sudden, some individuals who are super awesome people that weren't really open to having the conversations are completely open to the conversations now, because a lot of it is just dispelling some of the myths of a mortgage broker, right? The unknowns, the message from the retail chain saying that you're not in control, and all these other myths that are out there. But what I really have a passion for is showing all these loan officers and setting them down and saying, listen, like, here's a comp model, here's your rates. And when you go through a rate comparison versus where they're at on the retail side, it's mind-blowing, right? And then you go into the whole control of, that we have in-house underwriting, all this. I'm like, I'm actually of the opinion that you have less control when you're a captive agent, if you will, than being on the broker side. So have you kind of seen that over the career? Because, I've been around for 20 years, and, I know brokers kind of got blamed a little bit for the debauchery and things that went in 07 and 08. But have you found that being one of the part of your jobs and leadership role is dispelling some of the myths of the broker channel?
No, there's no question. So, I mean, like you said, kind of the first myth, which there is still a thread of, is that the quality that brokers originate is different than the quality that retail loan officers originate, which is, if you think about it, it's somewhat ironic because, to your point, Darren, many loan officers and many of our back office people used to be in retail. So did they all of a sudden get bad?
Right.
when like they were good here today, they went to a different company, all of a sudden they were bad, or less competent at what they do. It doesn't make any sense. But yeah, so I think the first kind of the biggest myth is the quality myth, and although I think that's been dispelled, it's certainly been dispelled through data. There's still an element of it that kind of persists, which frankly is not earned. I think the second thing is, to your point, I kind of look at the control element, where you know, and it may be true that you either perceive or actually have more control if you're dealing with an in-house underwriter, as an example. But what you don't have is leverage,
Right?
because you have one single source, and you are beholden to the very best of what they do and the very worst of what they do. Whereas as a broker, as you both experience every day, if for some reason Homepoint's not performing to your standard or to your expectations, or to, more importantly, the consumer's needs, then you can switch.
Right.
and
Yep.
and you know, as I think you guys know, I like to say that the broker's superpower is choice. So I feel like that leverage is frankly much more a much greater strength than kind of the perceived or real ability to connect with that individual within your organization that you believe you have control over, but doesn't report to you, has their own kind of set of issues they have to deal with, et cetera. So I look at it, and so I think that, to me, the superpower being choice is such an advantage over the fact that you may, real or perceived, have some element of control over kind of what your organization does on your behalf.
Let's stay on that topic for a minute, because I think that's so important as we continue the conversation with different types of originators, right? We talk about what's best for the end consumer, and that's really what drives all of the decisions, whether it's from Homepoint, Summit Lending, UWM, whatever. The consumer's experience is what drives massive movement. But I think the most important piece, and I've heard you say this, in fact, we actually heard you say this in an interview that you did with Matt Ishbia, CEO of United Wholesale, is that it really comes down to education. So how can we best educate people? So we just talked about a myth, right? And how the lack of control, or the myth of the quality being less with a broker. Maybe just stay there for a second and discuss some of the other myths that you've come across in your decades within the business, especially since you've decided to make Homepoint 100% on the wholesale channel.
Yeah, well, I think maybe it's kind of a corollary to what I said previously, Bobby, but like this idea that brokers are kind of I don't know, cowboys or cowgirls, as the case may be, and for some strange reason, the fact that they're small businesses with independence means that they're going to operate in a way that is incongruent with kind of the broader objectives of dealing well with the consumer, working well with their wholesale partners, et cetera. And like I said, I don't know. I believe that the kind of the DNA of that was from the financial crisis. Just to be clear, everyone had blame in the financial crisis. Brokers suffered a disproportionate share of the blame relative to their culpability, because, as you all know, brokers can only do what lenders allow them to do.
Exactly.
And so, if you look at who was responsible for it, it's like, again, everybody was to a certain extent, but brokers had a disproportionate share. And then, like I said, I think there's still elements of that DNA that persist in those perceptions. But to me, it's like if you can prove with the empirical data as we have from a HMDA standpoint that brokers are best for consumers, it's like, how can that possibly be incongruent with what is in the best interest of the consumer? It's like, it doesn't make any sense, right?
Right.
And then I think the second element is that somehow they're not behaving with some, I guess, in line with some protocol or some way in which it's believed. And it's like, okay, brokers are small businesses. If they don't behave in a way that is congruent with their kind of sustainability, they're not going to be in business anymore.
Correct.
So
True.
I just don't. Yeah, I mean, I think, like, to your point, it's like they're I think what we need to do is continue to use the data, the HMDA data. I should mention also the analysis that we performed on performance, which there is no meaningful difference in performance between broker originated loans and retail originated loans. As a matter of fact, the broker loans perform slightly better. Nice. The fact that we are much more effective at penetrating minority communities as a percentage of our total volume than collectively, And if that's important from a, whether it's public policy standpoint or simply kind of equity, it's like we're better at. So it's like continue to use that data to dispel, I think, whatever myth kind of emanates from the past or what emanates from people's perspective or perceptions. I think we can use the data to kind of dispel those, I'll say summarily.
Exactly. And I think it's continuation of the education to everyone, because the consumer, what we found, the consumer at the end of the day doesn't necessarily care where the money comes from, right? They just want to make sure they get their house, that they get a really good deal on their mortgage, and the realtor, wants to look good for referring that particular loan officer out there. So, I like to use the word layers when we talk to people, Willie. And when I talk about different layers, I'm talking about the additional bips and all the add-ons to the pricing when it comes to the retail side. And again, I was on the retail side for over a decade, but you're talking about a couple different layers of middle management. You're talking about awards trips. You're talking about helping to fund, TV, radio ads, pay-per-clicks, all that stuff. And when you sit down with an originator and say, listen, we can actually show you how to make more, have better rates, and close faster, so you can go out there and actually have a life and make more and spend more time with your family, it's really mind-blowing. So that's really been the fun part on our end. So, with saying that, I know Homepoint does a phenomenal job with helping the brokers out, but tell us a little bit about, is there anything specifically, like maybe you want to touch base on broker advantage that Homepoint has to help out the independent mortgage broker?
I think it all starts really with our account executives. So I think to your point, whether it's broker advantage or something else, it's like what we have is we have people in the field that have a high degree of experience that are there to help you all think strategically about your business, which we believe is a significant benefit to a small business. So I think so you kind of mentioned the layers in I'll say a traditional retail organization. I think one of the benefits of those layers is that there is time to think strategically. I think as a loan officer, you have to determine what is the cost of that to me and what is the benefit to me, and then evaluate that. And conversely, in a small business, a lot of times, you guys know it, it's like, it's kind of you looking at each other going, okay, now what do we do? Right. And so for us, the account executive in the field who can help you, not only with kind of the transactional work that is important to everybody, but help you think about your business in a way that it results in sustaining the advantage that you already have and creating sustainability. And as you mentioned, Darren, taking advantage of this environment. I think that for us, it all kind of starts with that.
Well, exactly. And the one thing that we have known for several years now is like the quality of people that you guys have in play out there. The account executives that you go to for talking about strategies or working through some issues on a loan or whatnot. It has been second to none, and that's been that's truly huge as a partner, as a broker, because a majority of the brokers in the United States are small shops, right? They don't have this massive back office. So, whether it's Homepoint or another investor, you have to make sure that you partner with someone that has that back office and the support. And you guys have done an absolute phenomenal job. So this might be a good time to drop Debbie's name and Philip's name on the podcast.
I think Diane too, from Alan and Becky.
Yes.
Willie,
by the way, we will take shameless plugs.
Absolutely.
Okay. All right, we'll do that all day long.
We'll give them too. So I've heard you say, and maybe this word has been kind of used in conjunction with each other, but I've heard you say displacement equals opportunity or dislocation equals opportunity. So maybe kind of expand on what that means right now for maybe a retail loan officer who's in a season of life in this profession where they've done so phenomenally well over the last several years, and all of a sudden right now pipelines are starting to dry up, or this is the time to focus on their business. What does displacement equals opportunity? What does it mean to you, and how can that really help somebody?
Yeah, so I think what it does is kind of what you said, Bobby, which is there when things are going well, everything's kind of working, there's a degree of comfort that comes along with that results in you not really wanting to search for something that's better. And because it's kind of, I'll say good enough. When dislocation comes, all of a sudden it's almost like, I don't know if you guys kind of heard about like in Vegas, they have those, they have Lake Mead and there's one other one. And basically the waters has started to recede in those lakes, right? And what's happened? All of a sudden these dead bodies start emerging in these cars and all this stuff.
Yeah.
It's like, oh wow, it's like all this stuff has happened, but we covered it all up because the reservoir was full. Now that the reservoir is going on, it's very similar. It's like now, like you said, it's like the pipelines are down, and all the things that heretofore you kind of said, well, it doesn't matter, or it's not impairing my ability to make a really good living. It's like they're now being exposed, and that's kind of what dislocation is all about. And so it should cause you to say, am I in the best place for me longer term, as opposed to what is comfortable for me at the moment. So I think that, to me, that's kind of what dislocation is. And then when you look at that, you say, okay, what may end up being different about this, like what happens afterwards? Like when my boss saw the fact that the SNLs would not be the power in mortgage lending, that created an opportunity, even though we were kind of in SNL technically, that created an opportunity for an SNL that was that we had no business financially being a significant mortgage originator. But what he saw was that if you could connect to Freddie Mac and Fannie Mae, that can be your capital source as opposed to a savings and loan balance sheet. So that's the other part of dislocation is like, okay, now where is the business going to go based on the fact that all these things have been uncovered? And so that's where it gets back to what's the most efficient, what creates the choice creating kind of opportunity, the superpower, and then what is best for the consumer? Because again, heretofore, it's kind of what's best for the consumer is we close a loan, you're happy with what you got. Now it's like I got to help you get in a house, and houses are still expensive, rates are higher. How am I going to do that if I don't have the best deal out there? So, that's kind of, to me, that ultimately that's what dislocation is. It's really kind of like your own comfort level or discomfort with what is happening, and then what is happening in the external environment that would cause things to be different than they were before in a way that would result in you wanting to make a change.
We've said this before. It's very similar quote to what you're saying about dislocation or displacement is that adversity equals opportunity. Exactly. And right now is the opportunity. Really. A lot of people are going through adverse situations and they're evaluating their personal, their career, their life, their spiritual, their health. Right now is the time, and I think you said it, a couple of things there, that quote, may ask yourself, am I in the best place or am I just comfortable? I think that's a phenomenal question for people to ask themselves. Yeah, and
like you said, Bob, it's like now it's like everyone has, if you don't have a level of discomfort with what's going on in the mortgage business, then you definitely have
a warped sense of reality.
Your nerves are like way different than mine. It's like because it's like if you see an industry that's gone from $4 trillion plus to Fannie Mae did had an economic update yesterday. Their forecast is for 1.6. So
wow.
You go, and I don't care. You go fill in the blank on what the industry is. If you go to a third of demand, it's like if there's not something that's discomfortable about that, then you got way better nerves than I do. But that said, it's like that doesn't mean the house is on fire and you run out screaming. It's like, okay, now what's going to happen next? Because
what's the plan?
This is like, and I think for some people, it's like, okay, is this really a career for you? And you saw that more like in the crisis, right? Where these truck drivers came in and they made $300,000, kind of dollar for dollars, and all of a sudden they were mortgage experts, and it's like, nah, not really,
Right.
Exactly. You took advantage of an opportunity, good for you, but it's like now you have to invest in it being a career, and $300,000 is not your value at this point.
Well, and the good news is there's still going to be 1.6 or 1.7 trillion in mortgage. So that's the good news, right? People are just going to have to adjust a little bit, actually try, a little bit harder, because a lot of people the last couple of years, they got out of the habit of marketing, building relationships, keeping in touch with their past database and their referral partners, because loans were literally just falling out of the sky. They just really didn't have to try that hard. So it's really going back to the basics of blocking and tackling, getting, rolling up your sleeves, getting back in there. So here's a question for you, Willie. Now, I know we're biased a little bit, but what do you see the future holding for the broker channel over the next year or two as we're going through some of these changes? What's your personal opinion as far as what you see coming down the pipe in the future?
I see, like you said, it's like the absolute numbers are kind of like, it's not what I focus on as much. It's like, what is the relative share? And to me, I just see huge share growth. I think we've seen a lot of momentum on that during 22. I think that will continue into 23. I do, speaking of self-serving, it's like, I think kind of lenders there has to be sufficient number of lenders who are focused on the channel and focus on the channel in a way that supports what you all do every day. And that's kind of, that's key. And we know there have been some exits. And, you kind of competitively, you go, well, it's kind of good. But strategically, you say, well, we need kind of a critical mass here. So I think, assuming that is the case, I think there's tremendous opportunity because as we talked about, it's like, I think most loan officers, that if they truly step back and looked at the level of support they get, which is significant in a retail shop relative to the value it provides to them, relative to the opportunity on the broker side,
Yep.
I think they would, I think many of them would be switching. And I think we're seeing that already.
Oh, absolutely. Well, I think it comes down to education. I heard something the other day that there was only 2 reasons why a loan officer wouldn't come over to the broker channel. Number 1, they've been in business forever and they're going to retire within the next 12 months. Or number 2, it's just the fear of the unknown and they just haven't been educated enough. Bobby and I, we have this term called fear bridge. It's like getting the people over the fear bridge to answer all their questions. It's not that scary on the other side, and it's just getting them ramped up for them to be like, oh, okay, now I just need to go out there and focus, build those relationships, bring in more deals, and close deals even faster, and do the right thing for the customer at the end of the day.
In that podcast that you did, Willie, with Matt Ishbia, which was awesome. We loved it. I mean, you two, it was just the 2 of you talking about the broker community and what it means to be a broker and how to succeed. But there was a note in there, and I'm trying to remember, I didn't write it down, but you start talking about how brokers are the ones that can really truly invest in their communities, which of course is greatest for the end user or the end customer. But really, I believe it was you that said, if you're going to be in this business longer than 18 months, like if you're planning on retiring, like DC just said, and you've always been retail, but if you're going to be in this business, in this industry for longer than 18 months from today, now is the time to really decide what's best for you and not what's comfortable. And most likely what's best for 99% of mortgage loan originators is to take a good hard look at the broker channel, because it is what allows you the most freedom, the most flexibility, the most chance to win, and most importantly, take care of your referral partners and your clients.
Yeah, no question. Yeah, I mean, and the kind of the community-oriented element of it, a lot of times when, I think you all know, my level of passion for brokers kind of extends to Washington, D.C., which I will say is I've said this now in a public forum, so I'm not afraid to say it again. It's one of the more uniquely unsatisfying things you'll ever do, but it's a necessary thing because brokers are today, our channel is disadvantaged based on how the agencies treat us from a pricing standpoint. So, but one of the things that I get asked is like, why are brokers better at like minority, for example? And I said, fundamentally, brokers are community based, and there are lots of retail shops that are as well, but there are also retail shops, as we know, that are national based, that are much more kind of refinance centric, that are that their orientation is just different. So to me, it's like if you're community oriented, it all goes very back, Bobby, to what you said, which is like, well, if you're best like a consumer and you're community oriented, it's like, what community would you want to live in? The one where you're treating everyone right, or the one where it's like you're going to force them into something based on what is in your best interest as opposed to potentially what's in their best interest.
Exactly. So we're getting close to time, Bobby. Do we have anything that we want to?
I think it's important to recognize, we have a little bit, but for Willie to accept this compliment, when other people give it to him, but as the quote unquote godfather of the industry or this channel of the industry, and for other industry titans to say, once Willie and Homepoint committed 100% to this avenue, it validated it for the rest of the industry. Right. And I think that's a really, really important thing to recognize, that when you do have these titans of industry such as yourself to say that this is the best opportunity for the end user, for the people working within it, for referral partners tied to everybody, that means we're all doing something the right way. And all we want to do is scream from a mountaintop and share it with everybody, because it's the community based. It's being able to be flexible. It's taking care of the client and your referral partners.
It's like brokers are better.
Oh, it's almost like brokers are better. Oh yeah, right.
That.
And that's a big deal.
Well, yeah. No, well, I appreciate the kind words, Bobby. I think it's funny because I actually said, I was talking to Matt Ishby about this. I'm kind of at an age and at a point in my career where it's like the most important thing for me is kind of doing what's right, as opposed to maybe doing what's easy, or maybe even doing what's financially remunerative in the short term to a certain extent. But ultimately, to me, it's like everyone needs to know that, and then a lot of us can make their choice, and some customers will feel better, or consumers will feel more comfortable going to their traditional referral sources. It's like, it's all fine, but understand what you're giving up by doing that, or what you're foregoing by doing that, and then you can make your choice. So to me, it's like, that's kind of where my passion is now, is like just getting people to understand it, appreciating the fact that you recognize kind of what's come before me, or what I brought before me, but it's like, so I'm at a point in my career where I'm just going to try to do what's right.
Well, you know what, Willie, as a fellow broker owner, man, I just want to thank, from all of us in the community, of just being such a foundation and a rock on the wholesale channel for brokers, because, if it wasn't for you and some others in the industry, this huge transition of the brokers making a comeback would have never happened, man. So, never discount how many lives that you're changing out there, and the broker owners and all the families that you affect by doing an amazing job there at Homepoint, man. So thank you from all of us. Keep up the awesome work, and we just can't thank you enough for spending a little bit of your time today with us.
No, again, thanks for the time. Love talking to you guys, and appreciate the kind words.
Absolutely.
Go broker, man. Go broker.
That's right.
Let's go.
Right. Well, you'll get to hang out with DC tomorrow. At the AIM event. You want to talk about a little bit about the AIM event?
Right.
Yeah. So I got a call a couple of weeks ago, and apparently I'm going into the Hall of Fame, Willie.
We are, you and me both, man.
Right.
The class of 2023. I love it.
That's right.
Let's go. I guess they're bringing in the old guys and putting them in the So, no, I've been around for a long time. But, no, it was a really cool honor. So looking forward to being a part of the Hall of Fame down there and hanging out with you and some of our other, coworkers, friends. There's going to be, some big-time speakers down there. So it should be a really, really good time.
I just snuck that in on DC because he doesn't like talking about himself. So I just made him say, I'm going into the Hall of Fame.
Yeah, congratulations. And, it's a super cool event. So can't wait.
Congratulations to you too, sir.
All right, guys.
Bobby.
Thanks a lot.
All right, Willie.
Thanks, Willie. Take care. Guys, this has been the Always Be Cool podcast, hanging out with Bobby and Darren and Willie Newman, president, CEO, and founder of Homepoint Financial. Everybody take care. Find us online where you stream or download all podcasts. Follow us on Instagram, Facebook, Twitter, etc. at Always Be Cool Pod. Have a great day, guys.
See you guys.
If you are hearing this message, you've listened to the entire episode. And for that, Darren and Bobby thank you from the bottom of their hearts.
They hope you enjoyed this new episode. And if you did, please leave them a review on Apple Podcasts, Spotify, or wherever else you're listening. Please share this episode with others who may be interested in our community.
Also, feel free to let DC and BK know which business or community leaders you'd like to see covered in future episodes. Get in touch in the comments or on social media. See you next time for a new episode. And remember, always be cool.
This podcast is powered by Summit Lending, NMLS number 1850081, Equal Housing Lender.